Hi, welcome back to another episode of the IRA Cafe podcast presented by American IRA. My name is Jasmine Trocchia, and I am the head of the marketing department at American IRA and your host for today's episode. I am super excited to introduce a new guest to the podcast. Her name is Whitney Elkins-Hutten. Hello, Whitney. And we met first in one of the investors roundtables for ladies, I think is how we came about crossing paths. And I know I've definitely got a chance to talk to you during one of those. So it's so exciting that you're here. I'm really glad to talk to you today. So tell us who you are and what you do.
Well, thank you so much for having me on, Jasmine. This is going to be fun. My name, again, Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. And, really what I do is I help high income earners and business owners take their active income and savings and turn it into passive income and long-term wealth. That's very simply what we do. We focus on helping people invest in multifamily, express car washes, and real estate debt investments. Now, I do this personally and professionally. I also coach people one-on-one, but again, the through line through everything is teaching people how to scale their passive income and long-term wealth.
So would you define your role as an advisor, or do you just assist the clients who've already made a decision? Like, where is your role in the whole process?
Yeah. So I meet the client where they're at. I'm not a financial advisor. We're true fiduciaries to our investors. So we're not necessarily selling them, advising them on their finances, and then selling them into our investments. Really what we do is we meet the investor where they're at. I give them, we'll coach them, help them through like whatever questions they have about scaling their portfolio or their understanding the passive investments. And then I'll make some suggestions on what could be best fit their portfolio. Oftentimes it's something that we have here at passiveinvesting.com. But also, we understand that all investors should be diversifying across operators, markets, and deals and different layers of the capital stack anyways in order to build the most well-rounded portfolio.
Oh, love it. Wow. That sounds really rehearsed, but tell me how you became to be part of passiveinvesting.com.
I wouldn't say it's rehearsed. This is what I love doing. I talk to investors all day long about this. As far as like, how did I get to this place?
Yeah, how did you get to where you are now?
I started investing in 2002. And actually, I didn't even know that I was investing. I bought a house with a significant other. A month later, the relationship fell apart and everything was under my name. The more principal, interest, taxes, insurance, all the utilities. And so when that relationship crumbled, I actually panicked. I was like, oh my gosh, what am I going to do here? And so I stuffed the rooms with roommates, people that didn't mind living in a construction zone, because this was a, rehab type property. It had green shag carpets, psychedelic daisies peeked all over the walls, straight out of the 1960s. And I taught myself electrical, plumbing, drywall, how to resurface floors, paid my friends in sushi, beer, and pizza in order to get the work done, and sold the property 11 months later. And
oh, wow.
That property, my mindset was this: get out from underneath this. Don't let this thing make you go broke, right? But when I sold it, and they just handed me a $52,000 check for work that I did on the nights and weekends, and paid other people in sushi, beer, and pizza. and I hadn't been paying for any of my expenses. My roommates covered everything. So I'd been living for free for 11 months. I was like, wait a second, there's something to this real estate thing. How many more of these projects can I do? And so I did several more live and flips, as what they're now called, and house hacks. Not all of them went as swimmingly well as this one did. But what it taught me is that I can actually, use the roof over my head to unhook the value that I create in the world with the time that I use to create it. And so that's really where I started learning about money, how money truly works, how creating value in the world truly works, all those different strategies that the millionaires and billionaires put to use in their portfolio. I just really started diving down a rabbit hole. And, focused on growing my wealth through real estate. I didn't have to go back to school to do it. Anybody can buy a building. And so did several more live-in flips and house hacks, scaled a 40-unit single-family rental portfolio, eventually transitioned into buying multifamily buildings, and then got into partnership on a private equity firm and helped scale that. And was general partner on 10 multifamily buildings, and then eventually transitioned into my work today, or what I do here at passiveinvesting.com.
So really the school of hard knocks is where you graduated from. I mean, if you were forced to live and flip first. Yeah. Yeah, absolutely.
I mean, trust me, I've had the hard knocks for sure, but right now it's just the school of life, right? Like really studying what the wealthy are doing with intention and taking consistent and persistent action.
Did you have a mentor or like an important person, or was there someone that you could come to that was, I were like, I don't know how to do this. I have questions about that. Especially when you scaled into commercial, that's a big step.
Mm-hmm. Initially, I didn't have a formal mentor. I was following, people like David Bach, probably, which is kind of on the same vein of like Dave Ramsey and Susie Orman. And so, I mean, that helped me get out of debt, but it wasn't really helping me build wealth. And it was really when I started, listening and reading about, Tony Robbins' work. I was like, oh, wait a second. He wrote the book Money Master the Game. And I just devoured that book. I mean, it's like a 600-page book, just end to end about how money works and, how Wall Street works. And I was the annoying person in our benefit manager's office going, okay, wait a second. Are you guys fiduciaries? Can we add like gold and like commodities to our investment portfolio? She was like, Whitney, no. You don't understand. We're pushing the easy button here, right? This is a marketing tool to get you to stay here. It's not about us helping you build your wealth. And I was like, whoa, wait a second. I'm building somebody else's wealth, and they're kind of like just throwing me a bone, so to speak, to get me to stay here. I was like, oh, hold on. I need to start taking matters into my own hand. And it's when I got into buying single family rental properties, I did the first couple on my own. And I can't say that I did anything wrong, but I didn't even know what cash flow was. I didn't even know how to calculate it. Mm-hmm. And then, you know what? I should probably get a coach. I'm going to go further faster if I can find somebody who's already done what I want to do and just pay them, get close to them, get in their world and pay them to teach me. Because one, I'm going to shorten my path, but two, I'm going to sidestep all of those landmines that they stepped on. Now, of course, I'm going to go step on my own landmines, right? And it's not going to keep me completely from making the idiot move. And so I got my first coach in about 2015, 2016. And I went from having 2 rentals in 1 year to 40 at the end of 2.5 years. So that was huge. And then every time I hit a ceiling achievement, I would try to figure out, okay, who am I missing in my world that's going to help me get to the next level?
Wow, that is impactful. Like, who am I missing in my world that's going to help me get to the next level? That's interesting.
So for all the listeners out there, read the book by Dan Sullivan, Who Not How. Especially if you have a business, that's such an amazing book, right? You're gonna, it's going to walk you through exactly how you should be thinking about outsourcing and going for your next hire to scale your business. But these are lessons and learnings that you can implement in your own personal finances in order to scale your portfolio.
Okay. That was Dan Sullivan. Who, Not How. Yeah, interesting. Love it. So speaking of books, the elephant on the wall in the room. So Money for Tomorrow. Tell me about that. You're the author.
Yeah, Money for Tomorrow. So I wrote it in partnership with Bigger Pockets. And this book is really the end-to-end blueprint on how money works and how to build and scale your wealth and pass it on to the next generation. So the generational part. Now, the book is for anybody, anywhere in their point of journey. It's not necessarily for new investors. It can be for more seasoned investors as well, because you can definitely get value from the book read it. You'll figure out how to, plug the 6 major money leaks in your portfolio. If you're, been challenged in the past 2 years of investing and you're just like, wait a second, I was told passive investing in real estate was a good thing, but my portfolio has had issues for the past couple of years. We could walk through the 7 principles of building wealth, and we show you, how to invest based on strategy, not on tactic, which is how most people got nabbed in the last 2 years. They invested in tactics with not understanding the actual strategy of developing their own personal investing roadmap. And then we go through the 3 phases that anybody needs to tackle in order to pass on their wealth more effectively and efficiently and not lose, say, $400,000, $500,000 at the finish line. And, somebody might go, hey, that's not me. I don't care. Like, that happened to my grandfather. He lost $400,000. Of course, he passed away. He didn't lose it, but the estate lost it at the finish line. And just for some very simple moves that should have been thought through and completed. But the premise of the book, I actually started writing these notes down along my investing journey for my daughter, because as we scale our portfolio, she needs to know how to steward what we've built. 1, so, she doesn't lose it all, but 2, so she can grow the empire, so to speak, right? I don't pretend that I'm going to have all the wealth built for the family, by the time I leave this earth. It's like cathedral thinking. She's going to pick up what I've done and she's going to run with it. So what were those lessons and learnings? Like, how can I shortcut her path? And that's really where this book was born out of, was all those notes that I was taking for myself.
Oh, wow. That's actually one of my canned questions that I ask a lot of my podcast guests is, what would you tell your younger self? And I think thinking what you want to pass on to a version of your younger self, your kid. So what kind of advice would you give your younger self if you knew then at 18, 19, 20, 21, 22, what you know now? What would you tell yourself?
A lot of things. But
a loaded question.
So really, read the book. And honestly, that's a huge, huge tool in and of itself. I would probably have put in my hand 2 or 3 very critical books that shortcut those big obstacles that we have in our life, right? How does money work? How do our relationships work? How does our health work? Like, how do we manage this all together in order, to create the best life that we want to live? Now, my book is pretty focused on the financial side of things, so I would probably hand over a couple of, additional books to my younger self. Mm-hmm. But, as far as financial information that I'd hand over to my daughter, it's what we're actually doing right now. Like, she's 12. She knows about interest rates and inflation. She knows about investing in the stock market. She's a cash flow investor in the stock market. She does have some appreciative stock. She has her own Roth IRA. We're talking about how can we use time on our side to scale our wealth. And so, for her, she's seeing Dad and I like having to sock tens and hundreds of thousands of dollars away into different strategies. But for her, and I'm like, hey, you get $500 at Christmas, all told with all the cash. Let's put $250 of that, like investing in stocks. We do that year after year. And, you get additional money for working in our businesses. Put that in a Roth IRA. You're going to be a net worth millionaire by the time you're 50. Mm-hmm. And you're not going to have to be scraping to try to figure out how to save like when you're 30 and make up for all that time and compounding.
Yeah. Oh, golly. Now I feel guilty that I was like, keep it in a piggy bank to my kids. So yeah. So that was looking in the past. So looking to the future, what trends or opportunities you see sort of coming down the pipeline in your industry as a financial guru or maybe a personal investing? What do you see coming down the future? What do you think are some of the good trends?
Well, and see, that's where I really like pushing pause in the conversation, because we got to go back to what the objective is for scaling our wealth, which is to get what we want with whom we want for as long as we want, right? Had that passive income. And then we got to learn the rules on how money actually works. Okay. When we understand the objective, the rules, and we learn the strategies in order to win the wealth game, we're now not looking at trends. We're looking at making sure that we're investing in assets that are adhering to the strategy that's working in today's market. And so what is one of those strategies, right? If we're going to grow our wealth, when we grow our wealth, we should be investing to preserve capital, create cash flow, get some sort of, appreciation or compounding if we can, and then diversification. Now, some people go, well, don't you always say tax benefits? I'm like, that's like icing on the cake. We should never be investing purely for tax benefits, right? We should be able to use that as a velocity lever to pull. But if we invest for those 4 different criteria, now I can go to the market and go, okay, what asset right now in today's market is going to give me the most capital preservation, the most cash flow, the most opportunity to create safe compounding or safe appreciation, and then create the most diversification in my portfolio? Well, most investors, if they've been investing, say 5, 6, 7, 8 years, they probably have a ton of equity or, investments already in their portfolio. So the market today is actually giving us debt and debt structure like investments. So either a debt fund or a promissory note fund, maybe even, a preferred equity fund, kind of debt-like structured investments. Those are going to be really key right now because it's what the market's giving us. It's taking advantage of the capital, the access to capital that's been sucked out of the market in this hyper supply recessionary environment. And somebody's listening to this and go, Whitney, we haven't called a recession. Just because we haven't called it doesn't mean it actually isn't happening.
Yeah, I was going to say it's a kind of you just stringed a lot of buzzwords, but I know in your to you that sounds like that makes a lot of sense. But no, yeah. Do you see that as positive, negative, or just a force to be reckoned with?
So I'll back it up with a story. So a few years ago, as a passive investor, this is what I do. I love, identifying other operators and investing in their businesses, real estate businesses, real estate backed businesses. Mm-hmm. And so I talked to other passive investors. I called them up and I'm like, okay, these are the top guys in the world that are making millions of dollars a year passively investing. And I'm like, tell me your perfect portfolio because I want to copy it. And every single one of them laughed, not at me, but just laughed. And they were like, there's no such thing as a perfect portfolio. They're like, we have guidelines of where we want to be, but we always are paying attention to what the market is giving us and making sure that we're adequately diversified and we maintain that diversification. Because when the market is on a tear, going up positively, like our equity assets are probably, everybody's going to look like a genius. Our equity assets are going to do amazing. But when the market is struggling, when capital's being sucked out, essentially banks stop lending on projects, which is what's happened in the past 2.5 years in multifamily, office, commercial real estate, or it's become more challenging to qualify. Now, well, you should be the bank, right? The bank's left. It's left this gap in the environment. This is an amazing opportunity for investors to step in and be the bank. Mm-hmm. And so we have to constantly look at what does our portfolio need? What is our timeline and risk tolerance? Where are we in the market cycles? And kind of work some magic and line these things all up. Now, I help people put together a base investment strategy and plan in the book Money for Tomorrow. So that would be a great tool for somebody to start. Just sit down with some, 15 just very focused, important questions. And if you answer these for yourself, one, you're going to have more clarity on what you need to be investing in. But if you're working with a financial advisor, you're going to be able to hand that information over to them and be like, okay, this is what I want my portfolio to do for me. Instead of them telling you what your portfolio should be doing for you, you're telling them what you need your portfolio to do for you, what your risk tolerance is as you identified it, and they can help you go shopping.
That was actually going to be my next question, is talking about the present. An ideal client at passive investing for you, what do I need to know already, or what should I bring to the table? Like, who is your ideal client? What do they already need to know?
Well, Well, that's part of my role is, meeting people where they're at and filling in the gaps. So, but for most people that come to us, they probably should already have some sort of understanding that they like real estate or what real estate could give them, or a real estate backed asset. And then I can meet them where they're at. I mean, if they're completely new, let's learn the terminology. Let's learn all the lingo. Let's learn what a PPM is. Let's learn all the documentation. Let's learn how to vet operators, markets, and deals. Let's learn what the process looks like. Let's learn, what's the difference between cash on cash return versus a preferred return, right? So I'm going to help kind of close all those gaps, meet them where they're at, and move them forward to the next level. Now, if somebody is more seasoned, then, they're probably coming in with some of that knowledge in place. And so I need to help, one, demystify, figure out, is what they think is true actually true? Okay, is there a myth there that they've adopted? And then two, teach them more about us and what we do, what our philosophy is as an operator. Because not everybody, any operator you talk to, they're going to have an ideal investor that works best investing with them. And then they're going to be people that, that aren't ideal fits. If somebody wants to do ground up development with hotels, we don't do that, right? It's not to say that you can't make money, but we have a more conservative cash flow like approach to our investments. And that's what we're helping our investors get.
So if I'm very interested in what you have to say or what you have to offer, where can someone find you online?
Yeah. Simply go to passiveinvestingwithwhitney.com. That'll get you to a subpage on the passiveinvesting.com website. And more importantly, that gets you to me, right? If you want to talk directly with me, you can fill out a little form and then you'll get access to my calendar and you can schedule a call and we'll discuss your investing goals and what it is that you're trying to do with your passive investments and if we're a good fit.
Fantastic. Any last notes or parting words of wisdom, anything we didn't cover that you'd like our audience to know?
Oh my gosh, I can sit here all day and talk about investing in real estate and goal setting and mindset. I can talk about it all. So I think number one, the biggest thing that I can leave investors with is, taking action. What is it that you need to do to take action? And sometimes that action is just as simple. If you don't know what your plan is, I invite you, get on a call with me and we can talk through what you're wanting to do in life, and then also what your obstacles are. And then we can start kind of pointing you in a direction in order to start meeting those goals.
Fantastic. Wonderful. Yay. This is so exciting. I think we should have you back again. We're going to need to have you back in a couple of weeks so we can continue the conversation for sure. So thank you so much for joining us, Whitney. It's been an absolute pleasure. So stay tuned for just a second. We'll have another segment after this. And if you have any questions about American IRA or self-directed IRAs, you can also reach me marketing@americanira.com. But check out Whitney. Check out Whitney's book. She's fantastic. Now it's time for another segment of the IRA Cafe Q&A. This is where we answer a client's questions or a viewer's questions or a listener's questions every week. And if you'd like to have your question answered live, you can reach me at marketing@americanira.com. This question comes from an anonymous person who is listed as Jay, the letter J. Hi, Jay. Thank you for submitting a question. We have had actually more than just this listener, but we've had a lot of questions at American IRA from clients about an EIN number associated with their IRA account. Now, the IRS indicates that for certain investments made within an IRA, that IRA has to obtain its own EIN number. EIN is an employer identification number. You think about like a business or an LLC usually has an EIN instead of a social security number. So IRS regulations state that the EIN is required for all SD IRA investments that generate UBIT. Now, whether or not your investment does is between you and your CPA. So you need to have a qualified professional give you advice on this. It's very easy to apply for an EIN number. You can do it online at the irs.gov, and it's free, it's easy, and you set it up. Just if you've ever done an LLC, you would obtain an EIN number the same way. We have had a lot of clients asking American IRA for the American IRA's EIN number, and that's not the case. It needs to be an EIN number made specifically for your IRA account. If you have further questions about that, you can visit our website. We have blogs, recent blogs from this past year with more information about obtaining an EIN number and when you would need to do that. Otherwise, you probably need to ask your CPA, tax attorney, or other trusted professional about whether this situation applies to you and your assets. Thank you, Jay, for submitting your question. And you can submit other questions at marketing at americanira.com.
American IRA, LLC, a North Carolina LLC, acts as a third-party administrator for New Vision Trust Company, a state-chartered South Dakota trust company. As a neutral self-directed IRA administrator, American IRA does not recommend or endorse any investments, individuals, or entities, including financial representatives, promoters, or companies. American IRA and the IRA Cafe are not responsible for other statements, representations, or agreements, nor do we evaluate the quality or profitability of any investment. American IRA does not endorse guests on the IRA Cafe podcast. Guest opinions are their own and do not necessarily reflect the views of American IRA, its subsidiaries, associates, or custodian. Participation in the podcast is voluntary and no compensation is provided. American IRA is not a fiduciary and cannot offer financial advice. Please consult your CPA or another professional before making financial decisions.